MJG portfolio. And actually, I was looking at your latest investor letter, and I'm curious what you're up to so far in 2025, and if you could give us any, insights into the performance of the fund so far in 2025.
Well, I'll start with the second point there. We only report, believe it or not, twice annually to partners. That kind of instills the long-term outlook that I want our investors to take. So I feel a little bit hesitant jumping the gun there. I will say we had a very strong Q1, and we're up double digits over that period. And after a horrifying, first 9 or 10 days of April, we're also up quite sharply on this month as well. So it's been a very good start to the year, and I'm looking forward to formally announcing the performance in the mid-year July 2025 investor letter. Of course, a lot can change between now and then, so I don't want to jinx anything, but it's been definitely a strong year thus far from a performance perspective. In terms of what we've been up to, it's actually been quite a busy period since we last spoke in late January. Probably the most noteworthy piece of news is we actually initiated a new position for a change. So that's exciting for me. You'll probably remember the last new name that we added to the portfolio was Corex Copper, and that was through a private placement in June 2024. And so we went nearly 8 months. Of course, we were busy trimming and adding the names. We liquidated a few names in the back half of 2024. But we went a good 8 months without adding a new name to the portfolio. But that changed in mid to late February. I'm unfortunately not willing to share the name of this new investment, at least at this point, because we're still buying shares, actually as recently as this morning. But from a high level, it's one of those Ben Graham cigar butt type stories. Maybe the closest analogy would be Golden Valley Mines, which was a longtime holding of the MJG Fund before it was taken out by Gold Royalty, I believe back in 2022. But high level, this is a sub $20 million market cap junior with an equity portfolio that covers its full market capitalization. And when we initiated buying, it was trading at a decent discount to that equity portfolio. It's since come up to basically a zero enterprise value. So the equity portfolio almost perfectly cancels out the market capitalization. And then they have 3 interesting 100% owned gold assets in Canada. But there's one in particular that I am quite optimistic about. It's located next to a large development project, which has seen some traction. And I think there'll be more news on that front to come. And if the thesis plays out, they'll be able to monetize the single 100% owned asset at a decent premium to the current market capitalization. So the thought is there's really 4 scenarios for how this could play out. The first would be the best case scenario, and that would be that they are successful in monetizing this asset and the equity portfolio increases in value over the next, say, 18 to 24 months. That would be a win-win. A second scenario would be that the equity portfolio stays flat or loses value, but they're able to monetize this asset at a premium to the current market capitalization. That would also be a great outcome. Third scenario is they are unable to monetize this asset as I expect, but the equity portfolio increases in value. So I would be okay with that outcome as well. And then, the one way we lose on this is that the equity portfolio decreases in value and they're unable to transact on this asset. So in my mind, I've kind of ballparked a couple years to allow this team and the CEO, who I've gotten to know quite well over the past 5 or 6 years, to work their magic. So high level, that's kind of the makeup of the new name that's been added to the portfolio. Otherwise, we've trimmed a couple of our positions just to free up some cash, by between 10 to 25% for each of those. So nothing too serious. We have also started the process of liquidating a long-time holding that has just been a stark underperformer. I'm sad to say that name is quite illiquid. And we have a decently sized position, so that's definitely going to be a multi-month process. But I've just kind of gotten going on that, so a little bit of spring cleaning going on as well. And then I'd also note we've seen some inbound in interest in terms of investors looking to invest in the MJG fund, and that's a nice change. We had a couple investors join last year, but it was really quiet, particularly in terms of inbound interest. Really, in the past 4 to 6 weeks, I've noticed a market change. So, maybe that's MJG specific, but I think that kind of anecdote could also bode well for the sector at large.
Interesting. Yeah, because you're the MJG, based upon what I understand, it's a pretty long lockup period, so it's not for everyone, right?
That's right. Yep, we have a 10-year lockup in place, which is definitely on the draconian end of things. It's not unprecedented. That's generally how private equity and venture capital firms are set up. Rick Rule was famous for his exploration capital partners funds that also contain 10-year lockups. But look, it's hard to have to get somebody to entrust them or trust you with their capital, and it's harder still when you're putting that type of time frame in place. With that said, and I do express this to folks that are a bit uneasy about such a lockup, I honestly don't expect the MJG Capital Fund to be around 10 years from now. It is much easier said than done, but my goal is to stick the landing as best as possible. And when we get to the manic phase, or when we get close to the manic phase of a commodities bull market, whether that's later this decade or early next, my goal is to distribute the assets back to the partners and maybe go hang out on the beach for a few years, or do something different until times get ugly again, and then most likely rinse and repeat. So I honestly don't see the fund being around 10 years from now, because I think this kind of commodity, I would say we're in a commodity bull market, but in the earlier stages. But I see it cresting, well before 10 years from this date.
So everybody that's smart enough to be on these spaces and to pay attention to you will know when to take profits on the resource stocks in the coming years, because you'll be closing down the MJG fund.
Well, maybe. Yeah, well, maybe. We'll see. It's easier said than done.
It is.
I can rely on folks that I trust, and to keep me honest. And we all get affected, by a sense of greed, especially when things are going very well. But I'm on the record multiple times, and I'm going to do my best to keep myself honest. Maybe you can help me do that. I mean, if anything, another concern is, it's quite possible that we leave the party early. So that's a risk that I'm willing to take. I would rather leave an extra 50% on the table than to get greedy and roll over the top of the cliff, so to speak. Because you and I have both been around through bear markets. The 2011 through 2015 was a particularly painful period for me personally, and I want to do my best to avoid experiencing something like that going forward. So easier said than done, but that is my stated goal, to stick the landing to the best of my ability.
Yeah, I think that's an important words of wisdom there. Not to say that we're in a frothy market or we're at the top of a bull market by any means, but when that day does arrive, it's important for all of us to take a moment to think about painful times in our lives, and painful times in market environments, in bear market environments, when there was quite a bit of suffering and you couldn't sell stocks in your portfolio, or if you did sell them, you were selling them at 90% losses. And that's just a little more incentive to take some profits during the good times, right?
That's right. That's right. There's nothing wrong with taking some money off the table. And I will note a lot of newer, younger investors that are either just wading into the space for the first time or maybe will be doing so over the next 2 to 3 years. They haven't had those experiences and they don't understand that 80 to 90% drawdowns amongst the juniors when things get really ugly do happen. So we can do our best to warn folks, but until you experience it personally, it's really hard to express how ugly things can get when you're on the other side of a bull market.
Yeah, that brings to mind 2010, 2011. I had a couple of pretty close friends at that time who I don't even speak to anymore. But back then, we were talking almost every day because we were so tuned into the market. And both of them made enormous gains in the first few months of 2011. Just absolutely enormous. And these are guys who were in their 20s. And both of them did not survive past 2013.
Yeah,
So
it gets
they
to your head,
had
man. It
they
gets to your
had
head.
yeah. All right, let's talk about better things. So the M&A cycle is picking up a little bit. We've seen some deals announced here in April. Let's unpack a few of those. So which ones have caught your attention?
Well, let's spend some time on the deals just announced this week. From my perspective, it's been a really exciting week on the M&A front. We woke up Monday morning to learn that Lumina Gold had agreed to be taken over by Chinese miner CMOC, which is a $20 billion Chinese miner. Interestingly, that group is much more known for its molybdenum, tungsten, niobium, and cobalt production over gold. And I did a little bit of research, and I actually couldn't find a producing gold mine in their portfolio. So I would be happy for somebody to correct me on that. But this is not a traditional Chinese gold miner by any means. But they've caught the gold fever, so to speak, and have agreed to take over Lumina at a valuation of north of $500 million. I will say from the Lumina perspective, I'm really thrilled for that team. Really solid group of professionals. I've gotten to know Marshall Koval, Scott Hicks, Leo Hathaway to a lesser degree, and some of the others in that group pretty well over the past 9 or 10 years. And I know it's been a tough slog for them with Cangrejos. I would have anticipated that asset would have been sold a few years ago. And if you'd asked them 10 years ago, they would have thought that it would have been, off their books and sold at a healthy premium probably before 2020. So it's taken much longer than I think they would have expected. But they got a good deal. I mean, I would call this far from an opportunistic bid from CMOC. Took place at a 40% premium to Lumina Gold's closing price last Friday, and a really healthy 70% plus premium to their 20-day VWAP. So really not bad at all from a Lumina perspective. I guess a couple other thoughts on this one. I mean, I don't think it was a coincidence at all that this deal took place so shortly after Noboa's re-election in Ecuador. So in some ways, it was a lucky break for the Lumina team, and I think they deserved it. They've been at this for a long time, but somewhat of a lucky break that Noboa's challenger, Luisa Gonzalez, who is far from a friend of the mining industry, was not able to pull off a win herself. And I think it's also clear that from CMOC's perspective, I don't think they're going to mess around here. Like this is, basically a feasibility level project. Noboa's term lasts until 2029. So I think they're going to get on with building this thing and getting into production by 2029. So it'll be interesting to see how things play out with the asset once it's in CMOC's hands. But I think they'll move quickly. And then secondly, I'll just note there's a little bit of speculation out there, or at least questions being asked about whether Canadian regulators, could take a look at this deal under the Investment Canada Act. The two reasons they maybe would is due to the size of the deal. It's kind of above that 500 million Canadian kind of unofficial benchmark that makes it a decently sized deal. Um, and also, Congrehouse does have a copper kicker, very low, 0.09%, 0.1% in that range, but it does have a copper kicker. Honestly, I don't expect there to be any issues, particularly with all the political tumult in Canada that's currently going on with the upcoming election, just a few days here. But that's something to watch as well. So
If the Canadian government does some intervention on this deal, I will be horrified.
that would be terrible news for the
Yeah,
sector, and
I
I
will be
don't expect
horrified.
them to. I don't expect them to. I am just noting there is a small copper kicker, and it's a decently sized deal. But that is certainly far from my base case. I'd like to
This
think
is
it's
chump
well below a
change.
10% chance.
This is chump change in the global context. It's not even a billion cat. It's chump change, you know.
Okay, fair. Um, so that's what I have for you on Lumina Gold and CMOC. I mean, honestly, the deal that is more relevant to me and the MJG partnership was announced the very following day, so this past Tuesday, and that was Origin's proposed takeover by Triple Flag for 421 million CAD in total. And for those that haven't been following closely, the deal in essence is an acquisition of Origin's 1% NSR at AngloGold's expanded Silicon project in Nevada. So the price tag on that in the deal is around 343 million Canadian. And then the rest of that 421 million total is that Origin's assets are going to be spun out into a vehicle managed by the existing Origin team with a stated value of 78 million, for the purposes of this deal. So this actually had a very similar premium to what we saw with Lumina. This one was at a 38% premium to Origin's closing price the day before. I think that partially speaks to where we are in this gold M&A cycle. Gone are the days of the no premium mergers or the 10 or 20% bids. 40% is kind of the going benchmark as we move forward here. And I have a lot of thoughts on this deal. I mean, I guess I'll start by saying that my understanding is that Origin really set a minimum number that it was willing to sell the Silicon royalty for, and was willing to walk and hold on to the royalty themselves if that number was not met. And I don't know if that number was 275 million Canadian. I don't know if it was 300 million Canadian. I don't know if it's 325 million Canadian, but I think it was probably somewhere in that range. And I will say there was some skepticism in the market, whether anyone would ultimately hit Origin's figure. But clearly Triple Flag did. And I think it's likely that there were some other groups that did as well. So Origin set an audacious goal for what they'd sell this for, and it was met to their credit.
Matt, let me stop you for a second. Has there ever been a 1% royalty that was transacted at this price tag?
Oh, that's a good question. Yeah, I don't have any immediate anecdotes, off the top of my head. It's worth noting that this is probably another 4, potentially 5-year wait before you see any cash flow here. So I mean, it's a very healthy, it's a very healthy bid
It's
for a
mind
1%
blowing.
NSR.
It's mind blowing,
It
actually.
is, but this is also just a phenomenal asset right in the heart of Walker Lane. Good solid operator that's giving it all the TLC that it needs. We're at 16 million odd ounces between the Silicon and Merlin deposits alone. I think those probably ultimately end up meeting up into a single ore body there. But this is going to grow and grow and grow. So
So,
this is a
as the
20.
royalty expert, what does that imply about the actual value of this asset? Like, if you had the entire asset, what's it worth?
Mm, it's a good question. I mean, I think, and I'm a bit surprised we haven't seen any movement on this front, but I think this is such an impressive asset that it could put AngloGold in play itself. I mean, I've been thinking about this more from the perspective of Altius Minerals, who themselves have a 1.5% NSR, covering the same ground that Orogen does, and actually quite a bit more ground. So, that's our horse in the race as it pertains. And I mean, I guess we indirectly own Orogen as well via Altius, because Altius is, of course, a 20% shareholder of Orogen. And so, in that respect, this is a double win for Altius, in that they own 20% of this company now being taken out. That stock is worth roughly, 80 million, give or take, at the $2 per Orogen share that's being acquired at. More significantly for Altius, this is a mark to market event for their 1.5% NSR at Silicon. With simple math suggesting a $515 million valuation for Altius's 1.5% royalty. And that's not even reflecting the fact that the royalty covers more ground, nor is it reflecting any, scarcity premium, now that Orogen is in theory off of the board. And, I will note there is a chance that somebody comes over the top as well. Like the break fee is pretty small at 12.5 million Canadian. I'm not expecting another party to come over the top, but it's within the realm of possibility. But it's interesting. There's some high stakes game theory going on here because, Brian Dalton at Altius has said pretty clearly to the market that they're seriously considering selling their 1.5% as well. And so if you're a Royal Gold or a Franco or a Wheaton and you can't stand the prospect of Triple Flag getting their hands on it, you have an interesting decision whether to come over the top and try to beat out Triple Flag for Orogen, or to kind of sit on your hands, wait for that deal to close, and then make an approach for Altius. So it's going to be really fascinating to see how it plays out. Altius has a earnings call coming up in mid-May. I think it's May 14th, if I'm not mistaken. So the Q&A section of that conference call is going to be really interesting. And I mean, I will say I'm surprised that we didn't see Altius, jump by 15 or 20% on the day that this deal was announced.
Yeah,
I think it was
why
up
do you
5.
think? Yeah, why didn't we see a larger move there?
Well, in subsequent days, it's played a little bit of catch up. But from what I can tell, analyst consensus for Altius's 1.5% there, before this deal was announced, was maybe in the 250 million Canadian range. And, now with this mark to market event, you're at a $515 million valuation quite easily for the Silicon royalty
That's almost
alone.
half their market cap for just that one royalty.
That is. And, if you take that $250 million number at face value, that's an extra 250 million in value that is, materialized overnight, so to speak. And at a $1.1 billion market cap, which Altius sat at before this deal was announced, you could have easily seen a 20% bump in share price. Probably the market was a little bit ahead of the analysts on this one. So while analysts were maybe expecting 250 million CAD, or that's what they were penciling in, the market was maybe a little bit more optimistic. But, I think, anybody saying that the Altius royalty was worth more than 400 million Canadian seemed a little bit delusional a week ago. But that's no longer the case. So it's a big deal. I mean, I think Altius was up 5% the day of the deal, another 6% the day after, another 1.5% the day after that. So yeah, it's up, give or take 10 or 11% since the deal was announced. But I think it could run further as this sinks in here.
Or somebody's really about to, wildly overpay for the, 1% royalty.
Right. Yeah, it's interesting decision for Altius as well. I mean, I'm not in the room there. I don't want to speculate too aggressively, but do they take a bird in hand and transact quickly off the back of this deal? Do they wait for the deal to close and maybe get a little bit greedy and see if somebody comes over the top, and that 515 could turn into a 575 or $600 million valuation, or implied valuation for Altius is 1.5% if somebody comes over the top. Do they decide this was a great mark-to-market event and we can call this a $515 million royalty and just sit on it and hold it ourselves? We'll see. My hunch is they ultimately do transact on their 1.5%, but the timing of that is unclear to me.
Yeah, I mean, I would be shocked if they didn't sell that royalty in the next year or so. I mean, that's a lot of money to just leave on the table. And if you're, like an industry, insider, that 9 out of 10 times, when gold is having a massive run, you're a seller of assets, not a buyer of assets, right? So,
Right. And I mean, it's a phenomenal advertisement for the royalty business model as well,
mhm.
because Altius got this royalty to begin with by taking over Callanan Royalties. I think this was back in the 2017 timeframe, give or take. They paid maybe a little bit over 100 million for Callanan, but the interest there was a 777 royalty, and then they had a royalty over Gunnison. So I would argue Callanan was more of a copper focused acquisition, and they got some goodies for free. And this particular goodie is now worth, just under half of their market cap. So it's beautiful how royalties can sometimes surprise to the upside, and sometimes in a very big way. And I think that's exactly what we've seen here.
Yeah, there's a lot of positive sentiment on this asset, obviously. People are just looking at the size of it, the location. Well, what an amazing location, the best place you could possibly have a gold deposit in the world, basically. Um, but we know mining, and it's not always easy, right? And buying this royalty, you're putting up a lot of cash up front, and then you're just waiting for 5 years, right? And then who knows? Maybe the ramp up doesn't go well, something goes wrong. It takes longer than 5 years, right?
Sure,
So
permitting delays,
a
whole
bird in
host
the
of potential
hand,
concerns.
$550 million bird in the hand. That's kind of hard to pass up, right?
Right, especially for a royalty company that prides itself on not being gold focused. I mean, I think that's one of the very interesting aspects of Altius. Aside from perhaps Ecora, it's really the only royalty company that largely confines its focus outside of precious metals. And I like that aspect because there's a lot of money to be made in precious metals royalties, and we own Elemental Altus, for instance, which is largely a gold focused royalty company, but it's also a competitive space for new deals. And it's also a competitive space for investor capital because there's a lot of other companies that can claim to be focusing on the same thing. Altius is kind of the odd man out with their focus on potash and nickel and copper. And so if they do take the bird in hand, I don't expect any of that money to go into any gold focused royalties. Probably the large chunk of it will go into buying back shares, potentially paying off their debt, and kind of then going on the hunt for non precious metal royalties to add to their portfolio.
That sounds like a very smart plan. Let's switch gears a little bit. So, would you ever buy a junior mining stock to speculate on a single, drill program, Matt? I know that you're not into taking big risk, and you definitely shun these more speculative, explorers, because it's kind of like gambling, quite frankly. But I'm interested in your thinking. Would you ever buy a stock to speculate on one exploration program?
Mm. Well, I'm interested in hearing your answer to this at the tail end. Um, I'll say for myself, and this might surprise you. This might surprise some of the folks that have followed me as an investor listening in. But the answer is actually yes, albeit very, very rarely. Um, but I will consider it under the following conditions. And the biggest one, and first, I should note, I'm not a trained geologist. I've not spent decades in the field kicking rocks. I do not have any mineral discoveries, to my name. So it's important to know yourself, and to know your limitations as an investor as well. Um, I do, however, have some extremely skilled well-respected geologists in my close network. And if one of those geologists is sufficiently excited about the prospects of a grassroots drill program, and then I'd say crucially is also putting their own money at work. So not just talking it up because they're friendly with management or because they think it's a cool science experiment, but actually writing a personal check, either through a private placement or open market buying. Then I will take a look. So that's kind of the key determinant. But aside from that, I also want to see the following things. First, a clear geological thesis that even I can understand, and that importantly can either be confirmed or killed with a reasonable degree of confidence, by nature of the upcoming drill program. I also want the company that's conducting the drill program to have sufficient financial resources to conduct a program that's large enough for the geological thesis to be confirmed or invalidated, again with a reasonable degree of confidence by the drill program. And then also very critically, like the size of the prize in the case of a best case scenario has to be freaking massive, like 10x upside at the absolute minimum. And so those are kind of my main criteria. Again, a trained geo who I know and trust, putting their own money to work, clear geological thesis, company has sufficient resources to prove or disprove this geological thesis with a reasonable degree of confidence, and simply massive upside if a best case scenario occurs. I will say that the last time the MJG partnership did something of this sort would have been back in early 2024, so just over a year ago. And it was a circumstance where all of these conditions were met. It was a story that I'd been following for years, and actually had owned previously at one point. And they were drilling a porphyry target. I'll be a little bit vague. This was down at their project in South America, where they'd literally been waiting for 4 to 5 years to receive permits. And one of the geologists who I keep in close contact with, and this is a guy that's known for being extremely cynical and pessimistic. He tapped me on the shoulder and said he was taking a punt on the drill program. And in this case was via a private placement, which included a full warrant. And furthermore, it checked those other boxes: clear geological thesis, company was raising enough money to give it a good go, and the upside was immense in that best case scenario. I mean, I think even before factored in the warrant, if they'd hit here, we were looking at 25x upside. This also came right on the heels of the Hercules discovery in Idaho. So the market had a very recent example of what a proper porphyry discovery can do to a company's share price. I will say the reason I'm not sharing this company's name is that the speculation did not work out. And I don't want to put this company on blast for no reason. I think they took a good shot, but it did not pan out.
Yeah, I know who you're talking about.
All right, well let's keep it between us then, and probably some other folks on the call can maybe surmise as well. I will say the company's share price did run up pretty significantly ahead of the actual drill results coming out. So we were able to take some chips off the table in advance of the disappointing results. Though, I mean, in hindsight, I should have been more aggressive in doing so. So, I think when the dust settled, well, we liquidated the position after the disappointing results came out. And I think when the dust settled, we'd lost, 5% on our investment and had, a full warrant for our troubles. So this particular speculation did not pay off, clearly, as I would have hoped. But I don't regret it, and would consider making similar speculative bets in the future if these circumstances are met. But again, it's got to be the validation of somebody that I know and trust. It's got to have that geological thesis, Company's got to be able to give it a good go, and the upside has to be, simply massive to justify the risk that you're taking in these types of stories. How about you, Robert? Where do you stand on this?
Yeah, it's a tricky one. Yeah, so I mean, I definitely do it. I mean, I'm a gambler at heart, so I do it on a regular basis. It is tough though, right? The odds are a bit daunting. Your base case is the drill program is not going to really bear fruit, and it's going to be a failure to the market. It's going to be a failure in the eyes of the market. It may not be a failure to the geos, but it'll be a failure in the eyes of the market. But it's more complicated than that, right? Because like you made several good points, and I think the most important one is really the size of the prize, right? So to do this at all, to care about these companies and these exploration programs at all, you got to go big. You got to have big targets. You got to have a big thesis and big upside potential if it pans out, because you just have to basically assume that the odds are daunting, whether it's 10 to 1 or 100 to 1 or 1,000 to 1. Well, that's up to your analysis and maybe talking to some smart people and getting their take on it, but it's somewhere between 10 and 1,000 to 1, I would say, basically. So you're not a favorite, right? You're not a favorite, so you have to go in really understanding that you're not a favorite, and Mother Earth is tough.
Right.
And there's a lot of things that can go wrong in a drill program, right? I've seen just about all of it over the years. But the size of the prize, right? And as you said, like, you did the speculation in this one company in Latin America, and it was early stage, it was really early stage. The market cap, I assume, was pretty low, and it had to run up as the drill program started. So it's hard to gauge that, but if a lot of people start paying attention to a story, the CEO gets out there on the networks talking about the drill program and the size of the prize, then it can have a re-rate even before the rigs hit the property, right? And so that
That's right.
can and that can be a trading opportunity for those who are pretty agile. I mean, obviously, if you're in the placement and you're on a 4-month lockup, it's a little trickier, but you're getting the warrant then to compensate you for the wait. And when that works out, when the size of the prize really does prove up, then it can pay off huge. When you have that full warrant, right? So you got to take that all into the equation as well. But I think it depends upon how engaged an investor is. So if you're going to speculate in a drill program on a junior, you need to be pretty engaged. You need to really do your DD. Definitely talk to the CEO and get a gauge of what his or her expectations are, and be clear on what a failure is. And don't let them sugarcoat it, right? Like, be really clear on what won't match up and will kill the project, right? And then also there's the trickier part too, because sometimes they'll put out the results. The market doesn't like the results, but the CEO will say the results are good and the project's not dead,
Right. A
right?
geological success. Right.
Yeah. So you need to really be objective there, and understand there's a difference between what the geo thinks and what your brokerage account thinks, right? And be very
Right.
clear on that. Um,
I agree, and I mean, especially if the company is only cashed up for that single drill program, you have to be particularly harsh in the case of a geological
mhm.
success,
Yeah, and that
because
and
the
that and
company's going
that
to have to
yeah,
come back and raise money again. So,
yeah.
assuming you don't ruffle any feathers with your exit, you could come back in 6 months when they take another stab at it. Maybe it's a different equation if they have 10 million in the bank and they've spent 2.5 or 3 million on the initial past program, and they're going to roll right into a phase two. You might think about that differently. But at least in this past case, the company had enough money for one drill program, and that was it. So that made the decision that much easier when there wasn't that unadulterated success that investors were hoping for.
Yeah, and that's a really important thing to understand, is that the market's usually going to be thinking ahead to the next financing. So you need to be thinking ahead to the next financing too when you assess the results. I wanna see if anybody in the audience has a question for Matt. I know I've got one or two more, but we got about 20 minutes left here, and if anybody has an astute, question for Matt, go ahead and pop up, and I'll call on you. Yeah, so the size of the prize is really big, and also the cost of the test, right? So for a little junior, this is an important topic. So the market cap of the junior matters a lot versus the cost of the test, right? Because like if it's like a 10 million market cap junior and their drill program is going to cost 7.5 million, well, that's challenging, right? That's daunting. Whereas if it's like a $30 million junior, it's a $3 million test. Well, that's very doable, right? So you wanna really gauge that and make sure the company is not biting off more than it can chew, right?
That's right. And the chance of success is the other variable to consider
That's very
to the
difficult to
best of your.
gauge, though. That's
Yes,
very
that is very
difficult to
difficult to
gauge.
gauge. But maybe if
Yeah.
there's been historic drilling that has intersected interesting mineralization, or you have a trench at surface of extremely high grade gold, you can maybe up the chances of success a little bit higher than you would a buried target. But yeah, Chad Peters at Ridgeline, that's his mantra. Size of the prize, cost of the test, chance of success. And if you're a hybrid generator like Ridgeline is, that can be a good rubric to inform whether you take a stab at a given project on a 100% own basis, or bring in a party with deeper pockets to go ahead and do the drilling themselves.
I say he's got a good business model. I know some people don't like it because he's giving up a lot of the upside on the projects, but frankly, it's pretty good when he can stake the ground, he can find these targets, he can stake it. It's not, I mean, it's not cheap, but it's not super expensive either. I mean, he can work up a new project for less than 500K, and then he's optioning it to South 32 or Barrick or something, and they're doing the heavy lifting, spending 10, 20 million, $30 million, and then shareholders have a shot at a big upside because you make a new discovery in the Carlin trend, a new high grade gold discovery in the Carlin trend. Well, what's that worth? And if you got 20% of that, that's pretty good, right?
Right, and a free carry at that.
Right.
And I think the projects that they've chosen to partner out, just to dwell on Ridgeline for a moment. I mean, it's clear why they did so. At
Mm-hmm.
Swift, we're talking 600 to 1,000 meter deep targets, and at their Carlin East project, now rebranded to Black Ridge, if I'm not mistaken, we're looking at 900 to 1,000 meter drill holes in order to properly test the correct horizons there. So it makes a lot of sense why a junior would not want to carry out those types of drill holes. So I think they've been smart about it and confine themselves to more manageable prospects. I mean, Atlas is their newest project, and that's kind of the perfect example because in discussions with Chad, I mean, they'll know if that's working with 100 150 meter drill holes, and if not, they can move on to the next pretty quickly there. I think we'll see Atlas drilled in pretty short order here. Maybe June timeframe is when they'll get the drills turning there.
Yeah, generally a junior shouldn't be drilling $1 million holes. I mean, even if the market cap is
A
50
good rule of
million,
thumb.
yeah, $1 million drill holes are really tough. You're paying a lot for that data. You're paying a lot of shareholder money and dilution for a relatively small amount of data. So you want to be thinking about these as like we're acquiring data that could raise the value of our company's assets. How much are we going to pay to acquire that data? What's the risk there? I mean, that's the way we want to be thinking about these things. Matt, I want to ask you about, can you share with us a portfolio holding you feel comfortable talking about that you haven't talked about previously?
Whew, putting me on the spot there a little bit. I mean, we have a pretty concentrated portfolio. I mean, we're at 18 names currently. 16 of those publicly traded, to private at the moment. And I've talked about more than half of them, publicly, either through the MJG partnership letters, or through podcast appearances or what have you.
Or maybe just something that
And
you haven't talked about with me yet.
Well, I do have one for you.
Okay.
I just talked about it publicly for the first time last week, and it's a bit of an odd duck within the MJG portfolio. The company's called Neo Performance Materials. Is that a name that you've come across before, Robert?
You stumped me. Never heard of it.
Okay, it is a rare earth play. But I think before I talk about Neo specifically, I should stress on the rare earth front. And I think it's topical, so hopefully it's interesting to folks that are listening in. Um, I think in the Western world there is a fundamental misunderstanding of how the rare earth supply chain actually works, and this is true in both the mainstream financial press, and I'm a big fan of The Economist, and I've been particularly disappointed of their coverage of the topic. And it's also true with the noises that are coming out of the White House. And I'm not sure if that's ignorance or willful ignorance, but either way, I've not been impressed. Um, I would say fundamentally, what the West and the market, to be fair, does not understand is that we do not have an acute rare earth mine supply problem. At this point, 40% of global rare earth supply comes from Western parties outside of China, with Linus's, Mount Weld project in Western Australia, MP Materials, Mountain Pass in California, kind of being two of the bigger players. And sure, I mean, it would be great if this share of global mine supply was greater than 40%, but we're leaps and bounds ahead of where we were, 15 years ago when there was the last rare earth mania between 2009 to 2011, 2012. So I would argue strongly that the issue today is not that there is not enough rare earths being mined by Western parties, but rather that the midstream steps that are necessary to take those rare earth concentrates and turn them into anything useful happens almost exclusively in China. So, I mean, rare earths are not like copper, they're not like gold, they're not like silver. You can pull them out of the ground and then process them on site into a concentrate, but there's a whole host of steps that need to be taken before they can be turned into anything useful to society. The first is that the rare earth concentrate has to be sent to a separation facility, and for the rare earth concentrate to be separated into individual rare earth oxides. Then those rare earth oxides in turn need to be sent to another facility where they can be reduced or refined further into what are called rare earth metals. Then those rare earth metals need to be sent to a separate facility that need to be and then turned into what are called rare earth alloys. And then only then can these rare earth alloys, be turned into the permanent high strength magnets that are useful for electric vehicles, wind turbines, and honestly, most modern day technologies that we take for granted, from iPhones to Dyson vacuum cleaners. And the problem that the West has is that China controls 85% of that midstream capacity. That's the separation, the reduction, and the making into alloys. And even worse, they control 90% plus of the global permanent manufacturing capacity. So when I hear Trump talk about, the rare earths in Greenland and the rare earths in Ukraine and how they're going to solve our problems, like it's a total red herring. And, putting aside the fact that the rare earth deposits, at least the known ones that are in Greenland and are in Ukraine, are a combination of low quality, low grade, particularly in Greenland, very infrastructurally challenged. And most importantly, extremely metallurgically challenged, almost across the board. Putting aside all that, and putting aside the fact that Ukraine is a literal war zone right now, I'm sad to say. Putting all that aside, even if I snap my fingers right now and 5 new rare earth mines came online between Greenland and Ukraine, it wouldn't go towards solving this fundamental issue in that the rare earths that were pulled out of these, brand new mines that sprouted out of nowhere, 90% of them would still have to be sent to China in order for the midstream steps to take place and to ultimately be manufactured into magnets. So that's the core of the problem. And I just think all the attention being paid to the rare earth miners and rare earth development projects is misguided. And that in a nutshell is why we own NEO. Like, NEO is the only Western company that has the capability of doing the separation necessary, reducing those rare earth oxides into rare earth metals, turning those rare earth metals into alloys, and then ultimately turning those alloys into either sintered or powdered magnets. And I think it's an extremely strategically significant company that very few folks know about. We were definitely early on this name. We've held it for roughly 2 years. I'll be very, transparent on our cost basis. If you look at the shares that we own right now, it's about 750 Canadian. NEO's trading at around 1075 per share at the moment. But we did do some tax loss selling there, so the more intellectually honest cost basis is around $9 per share when you consider the shares that we sold for tax losses previously. And look, I mean, the company, very strategically significant, and I would argue extremely undervalued. I mean, you can look at its valuation really 4 different ways. The first is on a sum of the parts basis, going asset by asset within the NEO stable. And, that will get you to somewhere between $16 to $18 Canadian per share. You can look at pure multiples, which is really the most aggressive way to go about it, especially with the share price re-rates that we've seen in, Lynas and, MP, as a result of China's rare earth restrictions. Well, I should say export bans announced 2 Sundays ago. Those 2 companies are trading at, enterprise value to EBITDA multiples in the high teens. NEO is close to 4x. So even a re-rate halfway there would be significant for NEO shareholders. But, if they were to re-rate to where the actual miners are being valued at the moment, I mean, we're looking at a $40 plus share price for NEO. Another way to look at it is that Molycorp actually bought NEO in the last rare earth boom, before Molycorp subsequently went bankrupt, and then the midstream assets that NEO owns was hived off from Molycorp's Mountain Pass. So that's why we have NEO as a standalone company today. That took place at a 1.3 billion US valuation. So that's 1.8 billion Canadian or so. I will say NEO's portfolio of facilities is not exactly the same as where it was, 14 years ago when that takeover took place. But it gives you kind of a rough approximation of, where NEO was valued during the last major, rare earth boom, so to speak. And then the final point I'd touch on is, Andrew Forrest of iron ore fame, a very astute, savvy investor. He actually indirectly bought 22% of NEO through a company called ASX listed company called Hastings Technology Metals, which he largely controls. That occurred in late 2022, before rare earths became topical like they are today, and he paid $15 per share for that 22% stake. Interestingly, I don't need to get into the machinations, but Andrew Forrest's private company Wyloo now owns those shares directly. So they own 22% of NEO directly. And NEO's in the midst of a strategic review that they initiated in June of last year. So we're close to a year into that. But I think management and the board will be announcing some tangible steps that they're going to take upon the conclusion of that review. So, I mean, I think there's a decent chance that the company is ultimately, taken out sooner rather than later. And, whether that's by Forrest, whether that's by Linus or MP Materials. There's a number of Japanese players that can do some of the necessary midstream steps, but not the whole suite, like Neo, that are likely to have a look if Neo puts itself on the selling block. There are other midstream chemical players that this would fit broadly within their line of business. So yeah, it's a really interesting time for the company. It's responded pretty well to China's moves, but we're still holding our position, and I think there's room to go, and I think there's upside, really, irrespective of which of these valuation metrics that you choose to use.
So, yeah, you made some good points there, and thanks for bringing up this NEO on TSX. So that's based in Canada, but I see they have some operations in a few different countries. Let's
That's
go
right. The
back.
core of their business is in Estonia, I should say, and
Okay.
there is some tail risk there. If Russia were to
Yeah.
expand its war beyond Ukraine, Estonia, is one of the potential countries in the
Yeah.
crosshair. So that would be catastrophic for Neo, and it's worth noting that is a concern. I'll also say that Neo's ramping up a magnet manufacturing facility in Estonia as we speak. It should be in commercial production next year. Once that's in commercial production, they still have one facility remaining in China, and that will comprise, once this magnet facility is up and running, the Chinese facility will comprise roughly 15% of EBITDA going forward. So they do have some China exposure, but it's greatly diminished from where they've been in past years. So that's another thing to keep in mind as one thinks through the story.
Definitely food for thought and a good invitation to dig in a little further on Neo. Let's just one more thing, because you brought up Trump and Ukraine and the rare earths deal with Ukraine as a red herring. I mean, obviously, I agree. I mean, anybody who knows mining knows that he doesn't know what he's talking about, and he's just making this up about the rare earths, in Ukraine and how valuable. I mean, the fact that people are using the T word, $1 trillion of value for rare earths in Ukraine. I mean, what the hell? I mean, what?
Yeah,
And
we've seen it all before.
you got, fairy tale after fairy tale. What on earth are they talking about?
Remember the $1 trillion gold deposit in Zimbabwe from a
Yeah,
few years
I
ago?
mean,
That was
just
a fun one.
yeah, but the president of the United States, come on, bro. So why is this? What B got in his ear on rare earths that this is now a topic that he's bringing up on a regular basis, and it somehow has found its way into the peace deal, with Ukraine. I mean, what's going on there, and why are rare earths so important now? Like, why are they part of the conversation?
Oh man, now you're making me psychoanalyze Trump. That's a tough way to end our discussion. Um, Look, I mean, this wades a little bit into politics, but I think he has imperialist ambitions. I think that explains the attention being paid on Greenland. And I think for Greenland specifically, by talking about the rare earths and how important those are to the United States, ignoring everything that we've just discussed, that helps justify to himself, the people around him, and the US public, why we should take over Greenland. So I think it's a justification, even if it's not well founded in fact. And then in terms of Ukraine, I mean, I think he takes great offense, and some of his supporters take great offense to the United States financial support for their war efforts against the Russians. He bandies about the $500 billion number of taxpayer money that's disappeared into the ether. I mean, I think the number is closer to 150 billion or so. But I think in the case of Ukraine, talking about the rare earths, at least in his mind, gives justification to kind of bend Ukraine over the barrel and financially extort them with this proposed mineral deal, which man, I put it at 50-50 if it ever gets across the the finish line or not. But that's a way to extract mineral wealth from Ukraine, a country that is going to significantly need that revenue, when, this war ultimately ends, and to rebuild their country. So I think in the case of Greenland, it's to justify the imperialist ambitions. In the case of Ukraine, it's to justify, why we're twisting their arm on the financial front.
But it's just
So that's
interesting
kind of,
how this became front and center, and then suddenly rare earths became something that he was talking about on a regular basis, and how important they are. I guess because he was informed that rare earth, metals touch our lives in all different kinds of ways, including with
yeah. I mean,
iPhones.
I'm sorry to cut in. I mean, I should also note, and I should have noted, he's also almost certainly getting an earful from the military, because we need these rare earth metals for night vision goggles, missile targeting,
Mm-hmm.
infrared, a whole host of military applications. And it's clear what China can do. They've done this before to Japan, just turn off the rare earth supply
Mm-hmm.
all at once. And so I think he's also thinking about the military implications if China does what they've just done, just less than 2 weeks ago. So I guess that's another angle to mention, in addition to all the consumer applications that rare earths are essential in.
Yeah. Okay, that's a good place to leave it, and that's kind of a great place to leave it, because then all these executive orders and the importance of copper, gallium, tungsten, all these metals front and center, because if China just shuts off the flow, then there's big problems in the West in the supply of all these metals, because we have no infrastructure.
Yeah, you mentioned those metals. I just can't resist mentioning another pet peeve of mine, which is when tungsten, antimony, gallium, germanium are grouped into the broader rare earth basket. That really frustrates me to no end. And folks that do that, you have a good sense immediately that they don't really know what they're talking about.
Yeah, and it's also interesting how in the executive order, the last one I read, he said rare earths, which is not super well defined. I think there's like a core of like a dozen or so that most everybody agrees on, but then there's a bunch more that are kind of thrown into the bucket sometimes. And then it said, and any metal that we that we deem to be critical. So it's not even defined now. It's whatever they feel like calling it is going to be in the list now, basically. And they included gold now.
And coal, I think, as
Coal,
well.
yeah. So coal is a critical
Beautiful, clean coal, right?
yeah, coal is a critical mineral. All right. Thanks, Matt. This is a great conversation. God bless Donald Trump and all the executive orders.
Thanks, Robert. That was a fun chat. Appreciate
All
you
right.
hosting.
Thanks for tuning in, everybody. This will be up on my YouTube, Goldfinger Capital, over the weekend. Have a great weekend. Cheers.